Good morning, everybody. It is November 6, 2023, 8:46 a.m. We are back with another episode of the Market Open. We are back for another week of the Market Open. This is the second week of November, starting it off officially. Since last week, we started on a Wednesday because we had a couple days of October left, which were the 30th and 31st, which was Halloween. And now we are back to once again start the market. I hope everyone had a great weekend. I hope everyone got to reflect, relax, do everything they needed to do to get themselves in order. But we've got a market to get back into, and we got a market to discuss. We have a lot of news to discuss today, and a lot of news, I believe, this week that we'll be discussing. Number one, Palantir, the NHS contract. Have an update on that. Not really the best news, but it is news nonetheless, and we have to over what's going on with the NHS. Number two, we have Elon Musk basically creating a competitor to Google. Will it actually compete with Google? I don't know, but it is indeed a competitor to Google. At least that's what a lot of the Elon fans are trying to say that this new product is. And then on top of that, we have CPI data this week. I believe we get CPI data on Wednesday. And as a result of that, we have a lot to talk about in regards to inflation and what's going on. Last month, it was 3.7. Oh, it's November 14th. Is that this week? Oh, so that'll be next week. Okay. So regardless, we have basically a week left until CPI. Last time it was 3.7. The month before that, it was 3.7. So we're really looking for it to come below 3.7. The 10-year coming from 4.9 to 4.6, up a little bit today from last week at 4.5. So if we really start to come down, and if that 10-year really starts to come down, then we might have some fun in this end of year potential rally. So we got a lot to talk about, a lot to discuss. Let's get into it. Thank you all for coming here, and let's get in to the market open. Imnop, Inbound, Ty Gordon, Lawrence, John Schwartzbeck. Thank you all for being here. Futbucker, Tobor, Monty, Spanish Guitar, Ray, Garcia, Miami Ren, Byron, Torben, SJ, Charles, Victor. Amit, did you have a time change? I thought I was going to miss the opening without Amit. Yeah, I didn't notice we had daylight savings. We got an hour back, apparently. So we like basically we got an extra hour to sleep. I didn't even notice on Sunday the time changed, but like the time did indeed change. Yeah, it did happen. Arwen, Garcia, Just Jeff will do it. Eeyore was right. Jay Jr., thank you all for being here. Mitchell, Mario, Oriello, Mike Washborn, Kelly, good morning. Joseph Viegas, Bay Ray, Darren, afternoon from the UK. Thank you all for being here. Yeah, it was weird. I didn't notice on Sunday there was a time change. I guess I was in my own world on Sunday for some reason, and I didn't notice at all that the time had changed. But the time had changed. So daylight savings is trash. I still don't know why we do daylight savings. I know it has to do with like saving the daylight and whatever, because now that it's like, so now it's like at 4:00, it's going to get darker than usual. And that's just because it's the nature of winter, right? So that's why we have to do daylight savings. Whereas in the summer, like it doesn't get dark till like 7 a.m. or 7 p.m. But I don't know. There is a movement of people that are against the whole daylight savings thing. Certain time in New Jersey, and they all match up the same. Like that time is the certain time in the UK, like same. But that is very interesting. All right, let's get into daylight. Wow, I didn't know people were that passionate about it. That's well, I guess that is a thing. Okay, let's get into the first thing I want to talk about today, which is Palantir. You should be able to see me correctly. Let me just make sure everything is good on my end with the market open. Yeah, everything should be good. Okay, everything should be good. Okay, so let's start off with Palantir. What do we got going on with Palantir? So the NHS contract, we got an update on it last night. This broke, and this news was really interesting. This NHS contract news, because so essentially mid-October is when it was supposed to be announced, right? Everyone was like, all right, mid-October. They delayed it in September. We're going to get it mid-October. They came out with a report last night, which is not mid-October anymore. Bayray says, do you have a daylight savings joke? No, but I'll think of one before the end of the stream. Don't challenge me, bro. Do not challenge me. I will do it. NHS England has not yet proven its case on the FDP. This is from Digital Health last night. With the award of the federal data platform contract set to be delayed until mid-November, NHS England appears to be seeking to drum up support for the FTP and secure public backing from the health system leaders for its $588 million data platform project. So it's delayed. Now, this is a really interesting sort of conundrum that Palantir shareholders are in. A couple points of analysis. Number one, they delay it till mid-November. Mid-November is just like 2 weeks away. So it's not like, it's not like it's delayed to some magical amount. They delayed it by a lot on October 4th to mid-October, which again is just, 11 days away if you go to October 15th. Same thing here. November 15th is very soon, which is mid-November. So this idea that it's delayed till mid-November, I think that's nonsense. I think we're either getting it in November or we're not going to get it until like 2024, right? So this is just their, way of delaying it further and further. Heard this story a few times. It's starting to happen. And then on top of that, what I really think is going on with the NHS is that they still do not have the public support they think they need to be able to do essentially this contract at scale. And the reason for that is, remember, the FTP is only valuable if people submit their data to it, right? This is the whole thing about Palantir. Like, people have to give their data. They have to take a company's data for that data to even be valuable in the first place, because they're not creating, some type of platform that can monetize anything or be valuable without people's data. So if people don't feel comfortable giving their data, which I don't think, as per that BBC interview, people are super comfortable yet. I think the NHS has a lot of marketing to do. And quite frankly, the NHS should have done this marketing months ago. But like, this is the nature with governments, right? Incredibly bureaucratic. They should have started the marketing a while ago. They should have told like the entire UK public, hey, we are going to give this award to a company. We don't know if it's Palantir. We don't know if it's Quantex. We don't know what company we're giving it to. But you need to be ready, because there's 70 million of you for free. And we are finally deciding to make this service actually reasonable. So like, get ready to be on board with whatever you choose, because it's either that or a private system. And a private system means you have to pay for stuff, and you've never had to pay for stuff. So you got to go with our system, right? I feel like the NHS has so much leverage here because they're giving this shit away for free. Like, when someone gives you something for free, you're going to take whatever they give you, and they're actually trying to give you a good product, and people are still so afraid of their data being manipulated. Nonetheless, it is a really hard PR issue for them to deal with, and that's why I think they're not announcing the award yet, because if they announce the award and no one gives up their data, then it's just a colossal failure on their part. And so I think they've got to basically fix that and get people to believe in that before things, keep going better from there. Let me know if the internet continues to be choppy, guys. Let me know if it's still bad. If it is, I'm going to take the 1080p that it's in and I'm bringing it to 720p. And then I will write a strongly worded letter to StreamYard and say, hey, you guys maybe upgrade to 1080p, but now the stream quality sucks. So let me know if it's still that bad. So that's what's going on with the NHS. As Arnie says, the length of delays is getting shorter. In mid-November, they're going to delay until December. Yeah, like I wish mid-November they didn't even say mid-November, because it's just stupid at this point. Like, that's 11 days away. Are you really going to delay it 11 days? Like, at this point, you shouldn't have even said anything, right? So I think we will see what happens in the next couple of weeks. But quite frankly, I would not hold my nose on imagining that we're going to get the report or the deal. I think the deal will likely come in 2024 once the NHS has officially decided they have marketed correctly. Now, if we get it before that, I'll be very happy, but I wouldn't bet on it. Let's take a quick look at Palantir stock in the pre-market, because the stock is up a little bit since it was on Friday. Palantir stock right now, $18.95. I think I was up at 4 a.m. just for a little bit, and then I went back to sleep and I checked my Robinhood and it was at $19.04. So we did break 19 bucks in the pre-market. We'll see if we break that again today. Palantir right now at $18.94 in the pre-market. Valuation is a little bit above $41 billion. People have been asking, look, do you want to buy? How are you thinking of buying? What is your thoughts on this? Here's my sort of basic comprehensive thoughts on the stock action right now. I think the company at 41 billion, doing 72 million of net income, 40 million of that net income basically being interest income from treasury bills. It's a little tough to justify the valuation given the growth is not even 20%. Okay. That does not mean you sell Palantir. That also doesn't mean you buy Palantir. So my mindset on this and my sort of analysis has been pretty consistent, I think, for the past couple of months. If you're a shareholder in Palantir, you wait it out and you have a 20-30 game because you don't sell a winner. These companies are always, quote unquote, overvalued. and you just DCA and you get a really good average, and you look back in 10 years and you pat yourself on the back and you're like, that was awesome. I did a really good thing for myself and my family. Now, if you're trying to enter a position, one thing I've learned since 2021 is timing does matter. And when you enter a position, valuation does matter. And if you pick a stock at a really high valuation, you could be waiting years to break even. I mean, if Palantir didn't go up 188% year to date, some people would not be breaking even, including myself, right? So like it really had a magical year in order for a lot of people to break even. Otherwise, people would be stuck in their $18 averages, $15 averages, with the stock's at $7-8, right? So I don't think this is the best price to start a position. Now, does that mean it could go up to 20, 21 and like just keep going to the moon? Sure. But at some level, you also have to think, man, this is getting a little pricey for some of the growth that they've shown. Doesn't mean that it's not the worst time to get some stock, but it definitely means you could probably get a little bit better of a price versus this. That's just how I'm thinking of it in the context of the valuation. So I think we'll see how the market reacts. Could it go up to 20 given the rally that potentially is waiting for us on the end of the year? And we'll talk a little bit about macro and how that happens. Yes, of course. But I think it's very similar to Tesla. Like there was no need to buy Tesla at 260. There was just no need to do it. There was no need to buy it at 299 right after they had a phenomenal earnings. Remember that back in July, and it ran up to 299. Like Palantir is on a high of an amazing earnings, and I just don't think there's a massive need to be like, all right, I'm getting in now and I'm chasing it, because then again, you will be chasing it, right? And if you're chasing it, you're not really getting to engage in the gains of it. So, I think that's important. Now, having said that, I agree with Bay Ray's comment. We are at the beginning of the steepening of the S-curve. This is really exciting. 1 month of boot camps, then an entire year of pilots. This is growth. 2024 will be huge. I agree with all this. Remember, they still have to prove the growth. As much as I think, and I've been saying this publicly over the past week, that boot camps is the inflection point for the company's ability to actually show their go-to-market strategy working. That's great, but like they still have to grow, right? We still have to see those revenue numbers, and until we see those revenue numbers, it's hard to justify some of the broader stretches of the valuation. So once we see those revenue numbers, then I think we'll be fine, but it will take some time to get there. I'm green in both positions, holding 4,600 shares. When is Apple earnings? Apple already did earnings, Jay Schwash. It was last week, and the earnings weren't amazing, but they did earnings already. So those are my thoughts on Palantir. We'll see what happens. I agree with Garcia, DCA, and chill. Do you think you'll have the opportunity to buy at 14 again? I think so, just because I think eventually things will come back down, but I don't know, right? I can't say definitively yes, but I also definitely can't say like, oh, no, it's not going to happen, because I mean, look, stocks go up and stocks go down. This is the one thing to remember. Like companies come up, companies come down. It's the nature of how companies operate. And then if you have cash on the sidelines waiting for those days, if you buy, then you get to own at a really good price. But it's just the nature of, do you have cash available, and does the market? I mean, who would have thought Google was going back to 120 after it was at 140? I mean, that's billions of dollars of market cap. It has to just swift away for it to come back. And it did. And it did off of good earnings. I mean, this is the one thing I like. Remember, when things are green, everyone's on a high. Everyone's excited. Everyone's like, oh my God, it's amazing. It's great. And then same thing with Google, right? At 140, it was just like, Google is just like the beast. Nothing can stop it. They missed cloud revenue by 20 million. The market says, screw you. And it's like, if they could do that to Google, why can't they do that to Palantir? Now, we got rewarded on Thursday, right? The market was excited. But the market's the market. The market's irrational. It could decide to get mad tomorrow because Palantir, so there are, I think the days of like 10, 11, 12 are gone. I don't think the days of 14 to 16 are gone. And eventually when Palantir is a $30 stock, I will say the days of 15 are gone, right? Because we're so far beyond that. But we're not beyond that yet. We're kind of, we're still in that range. So we'll see where it goes from there. NVIDIA earnings are this week, I believe. So if I'm not incorrect on that, we will be looking at NVIDIA earnings. And so I'm looking at my earnings tracker right now. We have Uber on Tuesday. We have Wish on Tuesday. We have Upstart, Rivian on Tuesday, Datadog. Today is nothing that exciting. Today is Hims. That's a company that's growing 80% year over year. So that one will be exciting for some people. Dish Network. Oh, Berkshire Hathaway. They put up earnings. Let's go to their numbers. Berkshire Hathaway. Let's actually transition to them. And then Wednesday, we have Disney, Twilio, AMC, Duolingo, Affirm, HubSpot, Under Armour, Roblox. Thursday, we have Unity, Trade Desk, Fiverr. Those are three important ones. And then Friday, nothing really that important. So still earnings week, but the big earnings we got out of the way. Okay, Berkshire Hathaway. Let's transition to these guys. They have a lot of cash. they've actually started raising a lot of cash, which is something maybe we should be paying attention to. Why Berkshire Hathaway is raising cash. Buffett is not always right, but he tends to raise cash before something happens. The video is 11:21. Okay, 11:21. For those that are just joining for the NHS, they are delaying it till mid-November. That is the update. They're delaying it till mid-November. So in mid-November, we will know when we have the Palantir deal, theoretically, because it's probably not going to happen until December, and then probably till 2024. Let's get an update on Berkshire Hathaway earnings, and then I want to talk about how much cash they have and keep going from there. Kelly says, my wrist looks great today. Thank you, Kelly. I appreciate you saying that my wrist looks good. I guess I'm getting to the point of attractiveness where like my wrist can look attractive. I don't know what's going on. This. I guess that's what happens when you lose 30 pounds or something. All right, here we go. Berkshire Hathaway. They've raised $157 billion of cash.
For Warren Buffett's stable of companies came to $10.76 billion last quarter. That's nearly 41% higher from the same quarter a year ago. As for that closely watched cash hoard, Berkshire now sitting on $157.2 billion. That's up from the high of $149.2 billion that was set in the third quarter of 2021. And I think it's up $10 billion from the year ago numbers. Berkshire's Class A shares are up by about 14% this year. That was set in November. If you were looking at the flat out earnings, it reported a loss. Stock investments the company has. It's a he always says, strip it out, look at the operating earnings, whether they're doing better or worse, and that will tell you what the underlying companies are doing.
But both of those things, number one, the stocks haven't, it's been a difficult market. And number two, you obviously think that it's not a great time.
Well, the biggest reason that they had such an increase in cash, more than $1.1 billion came in just from the treasuries that the company holds that are now making money versus not making money.
$1.1 billion, and you're talking about $150+ billion.
Well, it was very strong for them this time around was the insurance operations. Geico turned to a profit, and you had their insurance, their basic reinsurance and insurance operations performed even better, and that brought in a big amount of cash. Railroad not as strong.
He's not seeing anything. He's dying to buy right now.
No, but it does mean that they've got like a very substantial chest. He a certain amount. I think it's something like 60 billion.
Okay, I just brought sorry guys, I put the internet lower. I mean, not the internet. I put the stream lower. Was the audio lagging or? Okay, so the audio wasn't lagging, but the video was lagging. That's weird, man. I'm sorry, guys. I put the stream down to 720p. I think that's a thing with StreamYard. Like every time I put the stream to 1080, it starts getting laggy, and it should be better now. That's so weird. Okay, we're gonna finish that clip. It's like 30 seconds, and then we'll talk. I'm gonna write a letter to StreamYard and see maybe it's their issue or maybe it's my internet. We'll see. But let's finish this clip, then we'll keep going.
$1 billion in cash on hand, but that still gives you $100 billion to play with.
If we hear that he puts 10% of that in Bitcoin, that would be.
If you were looking at the flat out earnings, it reported a bigger loss than a year ago, but that's because of the stock investments the company has. It's strip it out, look at the operating earnings, whether they're doing better or worse, and that will tell you what the underlying companies are doing.
But both of those things, number one, the stocks haven't, it's been a difficult market. And number two, he obviously must think that it's not a great time.
Well, the biggest reason that they had such an increase in cash, more than $1.1 billion came in just from the treasuries that the company holds that are now making money versus not making money.
$1.1 billion, and you're talking about $150+ billion, aren't you?
Well, they had a lot of that before.
I know.
You build up an additional, but the other thing that was very strong for them this time around was the insurance operations. Geico turned to a profit, and you had their insurance, their basic reinsurance and insurance operations performed even better, and that brought in.
I guess I'm gonna have to get Ethernet, bro. I guess if we're taking this market open really official, I'm gonna have to get Ethernet. This is just the way it is. Nonetheless, Warren Buffett, $157 billion in cash. So here's the question to the chat, okay? And then we're gonna talk about their actual earnings. I have it pulled up and I have some metrics here. Okay, so you're Warren Buffett. You have $157 billion in cash. Number one, you're raising cash at a time where the market's rallying a little bit, so you might be taking some profits on things. You might be selling off different positions and just like stockpiling cash potentially for a 2024 recession where things are going to be cheap. We've seen Buffett do this before in the past. We'll see if he's going to do this again. What are you buying? That is the question to the chat. What are you buying? What are you buying now that you have 157 billion in cash? You can, this reminds me of what he did in 2016, where I think he put 40 billion in Apple in 2016. And now that stake is worth much more billions than 40 billion. I don't know how much exactly he put in Apple, but he put a lot of money in Apple. And now it's 51% of the portfolio. Is there a company that Buffett at this life cycle and his age of running Berkshire Hathaway can allocate capital into? He wants to go long on that company, because we know if Buffett buys, he's going to buy. He's going long. He's going long. And I guess my question is, what is that company you think that's out there that potentially exists for Buffett and does it? I know the Wi-Fi is still a little bad, guys. Just give it a second. It'll get better. And I'll work on getting that Ethernet by like the end of this week, because at this point, I guess the Wi-Fi is just not the best. Let me pull up their earnings, and then I'll read some of your comments, what you guys have to say. So this is posted by Andrej, who posted a good recap of it. As you can see in the revenues, 21 billion in insurance, 39 billion in sales and services, 2 billion in leasing, 4 billion in interest dividend. I think he's getting like 8 billion a year in interest income because of how much cash he has in T-bills. I mean, it's just incredible, some of these numbers that they're putting up right now and what they're able to do. And again, they have 157 billion in cash. They're just like, insurance is one of the greatest businesses in the world. You pay, a lot of people pay a lot of money per month. And unless something happens, the insurance companies don't really have to do anything. And then they can do something with all that money in terms of invest it themselves. And Berkshire Hathaway is heavily invested in a lot of those businesses. Buffett has said since for a very long time that insurance is one of the best businesses. So the question now is, what does he do with that money? Okay, PayPal. That's an interesting comment. We got PayPal. Amazon, in my opinion, wants Amazon, a strip club chain. I don't know if he would buy the strip club chain. That would be a little bit hard for him, I would imagine. ABCL, Rocket Lab. You guys are putting out all these names that he would never buy. He's not buying Dutch Bros. He's not buying SoFi. He's definitely not buying Google. He would never buy Open Door. I mean, that's like, the door is closed on that one. Bitcoin, maybe. No, he would never buy Bitcoin. You guys need to put something realistic. What would he realistically buy? What would Buffett actually buy? That's what I want to know. Because I don't think he's buying some of these good brand companies. I mean, look, I would love for him to buy Palantir. I mean, could you imagine if Buffett says we've put out a $20 billion position in Palantir, we believe they will become the modern operating system for the enterprise? I mean, that would be crazy. Or if he buys Tesla, Erwin says realistically something short term with a high yield. Yeah, I mean, you would imagine, like, I was thinking, you know what I think is the answer? I think there's a really good answer that no one's mentioned yet. Oh, Brian, you mentioned it. Never mind. Regional banks. I mean, like, why would he not buy regional banks that are trading $30, $40 or $20, $30 below their book value? I mean, if the bank's not going out of Buffett, we know he loves stable businesses. We know he loves boring businesses. Banks are boring businesses. We know he doesn't want any tech stuff. He doesn't want any B2B SaaS. He's definitely not betting on a different consumer product because Apple is the best consumer company in the world. I mean, he's getting a massive discount. If anything, he could probably issue warrants to himself with some of the regional banks, the way he did with Bank of America back in 2008, that started to become real in like 2013 when they started recovering much more. And he could get some really like beautiful discounts and beautiful opportunities in terms of buying the banks as well. I don't know. I mean, that seems reasonable to me. Regionals would be something I would imagine he'd buy. Buying Tesla admits defeat. Yeah, he can't buy Tesla. That would definitely admit defeat. India, that's actually not a horrible option if he starts buying some Indian stocks. I mean, we know India is poised for massive growth, but he already owns a ton of Bank of America. Yeah, but Bank of America is not a regional. Like, again, some of these regionals, like Bank of America, as you could say, it's undervalued, but the regionals are like undervalued. I mean, like, they're pretty destroyed. And they're still undervalued, even though they rallied last week. So, real estate. Remember, Berkshire did initiate a position in the major real estate construction companies. What would be interesting is if on the Palantir earnings call, Shyam Sanger said we had a $40 million deal with one of the largest home construction companies in the United States. It would be funny if one of those companies was one of the same ones that Warren Buffett started buying some stock in. I forgot the tickers of what he bought. I think it's like NDR, LD something. I forgot the tickers, but he's bullish on housing construction in the United States as well. Isn't he trimming Bank of America? I actually don't know. I'm not sure if he's trimming B of A. He might be. He might be right on that, Erwin. But I don't know. Like also like a company like Netflix, right? Would he ever buy Netflix? Probably not. He wouldn't buy Netflix with 157 billion in cash. But like it would be interesting if he did, right? Like Paramount, he owns Paramount. But it's so funny because like he owns these companies that are like legacy companies. Paramount is nothing compared to Netflix and streaming, but it's super old. But it has a dividend. So I guess that's why he feels comfortable owning it versus like a high growth tech company like a Netflix, which is not that much high growth anymore. Would he buy Disney? Disney also is one I think he could definitely reconcile buying. Disney's at 2014 levels. Iconic brand name. It's not going anywhere. If anything, I think he would buy Disney on the off shot that Apple might acquire Disney, because that rumor has been around for a long time. I think Tim Cook is going to do one acquisition before he leaves. You could imagine that would happen. I don't know. I don't know what he would buy, but it would be interesting to see. I don't think he could buy SoFi because he wouldn't be able to get a massive position in them, or I don't think he would want to get a super big position in them either. So we will see what he ends up doing, but he's going to do something. We know he's going to do something. And so when that next 13F comes out in the next, I think, 20 days, we get his 13F, then we'll know a little bit more about what Berkshire is trying to do. Nonetheless, he is raising some money, and this is important because at the end of the day, he feels that there's raising cash, and that value might come in the fact bond yields are coming down. Let's go to the 10-year real quick. Let me pull this up. This 10-year is starting to fall down pretty aggressively. Right now, the 10-year is at 4.629. It's up a little bit on the day, but it is down significantly from last week at 4.9. Right now, we're seeing the 10-year at 4.629. It went to a real bottom of like 4.58 last 4.5583 last week. Now, can we see the continuation of this 10-year to keep going down? You know, it would be funny if Warren Buffett just buys 10 years. If he takes 157 billion, he's like, you know what? I'm old. I don't want to try to figure out if a business is, I'm just going to put it into US debt. That would be hilarious if he does that. I don't think he would. I think his nature is he loves being a capital allocator. He knows how to allocate and compound capital. So I don't think he would do that. But if he did, that would be funny. 150 billion, potentially into T-bills, 4.629%. I think this end of year rally that we're all excited to see happen, this 10-year has to get down to 4.3, 4.4. And what I think will potentially get us to that level is inflation data coming out next week. Now, the problem with inflation data coming out next week is I still think there are some things that held up inflation pretty well in October. One of those things being oil. So oil has fallen off in November. Right now, I think oil, where is it at? $81, right? So oil's at 81, which is not too bad. But for the majority of October, it was at 94, 93, or even 90. So we're probably not going to get too much decline in the energy index. Used car index is probably going to come down, but the problem is in October, because the strikes were still legit and the strikes just ended a couple days ago, people probably went to buy some used cars if they didn't have enough supply of getting new cars, which means the used car price index might not be going down as much as well. And then on top of that, you have to think, obviously mortgages hit 8%. Housing prices did come down. We sold about 12% more houses we sold in October than we did in September. So people were buying houses. We didn't get a housing crash by any sense of the imagination, even though the average price for a house came down. So I don't know if there's enough supply on the markets in regards to housing that will lower the prices of rents and lower the prices of houses writ large enough to make a dent in inflation. Those are the three things I'm looking at. There's probably some other things that have come down. Food is still inflated. I mean, we all kind of know food is like still pretty expensive, and it's kind of annoyingly expensive. I mean, the best, like some Ubers. When I was in Vegas last week, like an Uber would be 2 minutes and it's $11, $14. And it's just like, this is stupid, right? Like, why are we paying this much, right? And I could only imagine that because Uber is having to inflate prices because they see that their costs are getting higher as well. So it'll be interesting to see if the CPI can come down from 3.7. I don't think it's going to go up, but I do think it will come down at least from 3.7 based on what we had last quarter. And so we will see where it ends up going from there. Again, I'm sorry, guys, if the internet is being a little weird. I'm going to just transition this here. I will definitely be getting this Ethernet cable because this is getting stupid now at this point for the Ethernet to be weird. Let's transition to Elon Musk and what he launched over the weekend. So we're going to pull this up right here. Let's take a look at a clip. Elon's basically launching a ChatGPT competitor, and it's actually, I think it has some interesting potential given what it's trained on. So let's take a look at this, and then we'll keep going from there.
Welcome back to Squawk. Elon Musk's new AI venture, XAI, launching its first chatbot technology called Grok. Prototype is in its first 2 months of training and is only available to a select group of users before what will be a wider release. The company is saying chatbot is built to have a bit of wit and a rebellious.
Now I know why the Wi-Fi is bad. Give it 2 seconds. Now I know exactly why it's bad. I'm going to change it. It'll get better in 2 seconds. All right, give it 10 seconds. It'll be better. Okay, I know why. It was on a router. It wasn't the actual Wi-Fi. So I think it should be good now. I think it should be all right.
Streak and should answer the spicy questions that other AIs might dodge. The company said that Grok has access to data from X, the platform formerly known as Twitter. Musk demonstrated chatbot's sense of humor with jokes about Sam Bankman-Fried and a sarcastic response to a question about a recipe for cocaine. It does not provide the recipe; it just tells you not to do that effectively. But it's a funny answer. And then, but the piece of it that's so interesting to me, at least, is if it's being trained off of Twitter, effectively, or X.
Yeah,
it means two things. One is it's arguably more up to date. The question is going to be, obviously, there's going to be an accuracy question, right? And then there's a secondary question, which is actually going to be a very interesting fair use question. So everybody who's been on X or Twitter over the past decade or whatever has put lots of interesting information into it, like a hive mind, right? And it was considered sort of a fair use situation to take a quote from a newspaper or a book or whatever, oftentimes the best quotes from those things, and put them onto Twitter, right? Because people would actually copy and paste those quotes and put them, and everybody considered that within the media landscape content world as a fair use way to do it, right? Because they were oftentimes sending you off then to said article or said book or whatever it is.
Basically find the entire book or the entire article.
But if 100 people did 100 different quotes from the same article, and now it is in
basically
quote, the hive mind of this system, and the system, because he owns it, is allowed to read it, it just raises some very interesting questions. So a couple thoughts for the morning.
I don't know that it's going to be that much more misinformed than the rest of the internet, because the whole internet is basically a cesspool of information. So where you're training these things
seems like a slippery.
All right, so Elon's being a little much. Elon launching Grok AI. This is very, very interesting. Look, essentially, he's done something that Twitter should have done a long time ago, which is you have hundreds of millions of real-time updates on anything you can imagine in the world. We got about 11 minutes until the market opens, so we'll get there in a second. You've got sports, politics, music, obviously finance. You've got anything you could imagine, every update, every topic in the world coming at hypersonic speeds in this centralized network. All of that at real time obviously could be used to train something to be able to give real-time information in a meaningful way. And that's what Grok AI is. I am actually very bullish on this concept, this idea, for a couple of reasons. Number one, you would argue it's better data than Google and ChatGPT, right? They're training off of like articles that are published on the internet. Elon Musk and co are training off of what people actually think about a subject. All of that's being trained in one place, and then that's being interpreted via this AI. Now, the question then becomes, why would people start typing into this over like Google or ChatGPT? And, you know, Elon has distribution. They have hundreds of millions of people they can give Grok AI to be able to use. The problem with this product is potentially misinformation. Obviously, people are tweeting stuff that's like nonsense. And so if you're training it off of stuff in real time that's like fake and that's not real, you can imagine the thing that gives you results is also really bad. And so as a result of that, I don't know how strong the results of this will be, but the product definitely has the potential to give fantastic results because it's being trained on everything that's happening in real time. And that's why it's really important. Now, would people start using this over ChatGPT or Bard? I have no idea. I don't know if people would even pay for it. But the fact that it exists, it just shows that the rate of innovation with Elon and companies is still amazing. For those that are just tuning in for the NHS news, the announcement is that it's delayed until November. So they announced last night they will be delaying the Palantir NHS contract until November. So we will know in November what they get. That's probably a lie. We're probably not going to know until December. And then in December, we're probably not going to know until 2024. My analysis on it, you can go back to about 4 minutes and 18 seconds of the live stream for me talking about it. They have to market and advertise this NHS contract in a meaningful way. And until they do that, they're just not going to get people to care. So I think they have to do a lot of marketing, a lot of advertising. They have to get people to buy in, or else they're not going to give in their data. If they don't give in their data, the federated data platform is worthless. So until they do that, nothing's going to happen. And so I think it's going to take them some time before they go from there. Mr. Seymour Duck says, wasn't it 6 months ago that he signed an open letter for companies to stop advancing in the AI? Yeah, that is kind of funny. I think Elon, when he signed that letter, I was just like, really, Elon? You're signing a letter to get people to stop it? Like, you're the innovator of our generation. You're telling people to stop advancing AI. So I guess he realized, you know what? If everyone's not going to listen to me, then I'm just going to keep advancing AI. So nonetheless, that product trained on all this real-time data, I think can become incredibly exciting. The problem is the value of the trained data. I don't know what type of results it will actually give. And so until we are able to use it, I tried signing up, but it has this huge wait list. We're not going to be able to know what it actually does. I also, the other thing is, how do they monetize this? I guess maybe it's part of X Premium, right? I will be upgrading to X Premium, which is $16 a month. I pay $11 a month right now. I'm going to pay the extra $5 a month because it prioritizes your replies. And me, I use Twitter a lot. I like Twitter. So for those that are not following me on Twitter, make sure you check me out on Twitter. I'm like an avid user of the product. I really like using that product. So it's worth it for me to pay for it. But I don't know how many people in the world are actually going to pay for that type of product. I just don't know. So we're going to end up seeing, maybe that's how they monetize. They charge $16 a month and then you have access to it. The one thing I am realizing, let me pull up the charts here for the market. The one thing I will say, and this is actually a little bit of a concern I have for Palantir, is I am seeing a lot, and I think if you guys just do some quick Google searches, you will see this a lot as well. I am seeing a lot of different startups and products that are essentially commoditizing the LLM AI sort of infrastructure process. Meta has Llama, Databricks has their own thing. Obviously, Palantir has AIP, but Palantir's AIP just connects to the different LLMs that exist. You obviously have ChatGPT, you have Bard. One of the things that's actually making me just a little concerned in terms of understanding this landscape, as I've been doing more research, you guys know I'm working on a side project with LLMs, right? I'm just playing with it on the side. So I've been kind of very easily been able to set up the entire thing that I'm working on and train my own models. This thing is not hard to do. Like, it's so commoditized to the point that it's very easy to set up your own LLM and train it on your own data, like right now. Now, obviously, Palantir's value proposition is when you're dealing with a Fortune 500 company, how do you really, bring value to that entire company? There's a lot of data, there's a lot of security, all this stuff. So there's a lot of stuff involved. But it's not the hardest in the world to build your own LLM and then start interacting with it. And so as a result of that, I don't know. I think there's something to monitor in regards to not just Palantir, but a lot of these software companies that are leveraging AIP. Like, if Twitter could build a ChatGPT competitor in 8 months, it goes to show you how commoditized these models really are. Bitcoin at 35,000 as we start this Monday morning. And I don't think it necessarily, takes away from what Palantir's doing with boot camps and all this stuff. It's not like that. It's not like it's a thesis breaker. It's just one thing to keep in mind, that there's other companies in this space, and really it's a go-to-market approach now. Like, Palantir can do this, and maybe some other companies are going to try to do this, or they're going to try to offer different solutions. Palantir's got to be really quick with their go-to-market, which is what we heard from the earnings call, that they said they're trying to be really quick, which is, it was what I wanted to hear. But this is a winner-takes-all market because there's so many people that are trying to be here, and there's a lot of ways for people to do it on their own. So Palantir absolutely has to be quicker and try to get to what they can do to get the job done. Patricia Didier, thank you for the $10 Canadian super chat. I appreciate it. Canada is a good place in my heart. A lot of special people that I know live in Canada. So thank you, Patricia Didier. Your last name also is awesome, Didier, for the $10 super chat. I love it. Thank you so much for this. I appreciate it. So let's see what we have in the comments. Who wants an NHS update? They don't seem to matter. Keep delaying. Yeah. I mean, it seems like they're going to keep delaying it until we get it. Snowflake's just released their Cortex, which sounds the same as AIP. I haven't looked into Snowflake Cortex. We'll look at it in a second, but it probably is something like AIP. And again, it's just, I was talking about it with a shareholder over the weekend who has 32,000 shares of Palantir. So it's not like I'm just pulling this out of my ass. And he was bringing up this concern as well. And again, the guy's 32,000 shares of Palantir. So he was like, he's in the tech space and he's like, I'm seeing a lot of companies commoditize the LLM creation process. And Palantir's AIP sounds phenomenal, but it's not like they're the only guys doing it. I mean, like Foundry, it seems like they were the only people doing it. That was real innovation. AIP, even they've admitted it's like a wrapper for an LLM, right? And so if they're not the only people doing it, we got to really analyze that go-to-market. It's something you got to keep an eye on, because if there's other people doing it and they could potentially give a product that's even 80%, 70% as good as Palantir, they're going to lose some deals. And so that go-to-market is incredibly important to be able to understand in a meaningful way. Doug says you need to have actionable information embedded in the LLM conversation. And that's where Palantir's mode is. Because people that are buying AIP also have Foundry, the ontology is what's grounding the LLM in reality and giving real information and real updates and real context, which is why I think Palantir has a moat in this. But there are other people trying to do this, right? It's not like it's only Palantir. So I think they're fine. It's just that go-to-market has to be swift, and they are acting like their first name is Taylor, because they are being very swift in their go-to-market strategy. Okay, jokes right before the market opened, 3 minutes. I know some of you smiled at that, and if you smiled and don't want to admit you smiled, that's okay. Everyone can be miserable, but for those that did smile, it's okay to say you smile. 873 people here. Thank you for being here. We got 3 minutes until the market opens. Palantir, $18.97, up almost 30% after earnings. Phenomenal earnings for Palantir shareholders. Truist Regional Bank is up 0.55%, $31.36. Enphase recovering a little bit at $81.50 from $73 it was at. So Enphase back in the 80s. KRE Regional Banking Fund at $43.62. Netflix at $432. Tesla at $223. We will see which direction the market decides to go this week. I would say the market continues with this momentum. Tides are turning very bullish going into the end of the year. People are saying, why wouldn't we be in the market? Look at NVIDIA. NVIDIA was at like 398 last week. I tweeted a picture of NVIDIA below 400. Now it's at 450. That right there just shows you how insane this market is in terms of, how bullish it can become in how short amount of time, because people don't want to miss out. This is one of the best times to be an investor in technology ever. And you've got companies like NVIDIA that can fall below 400 and then rebound right back to 452. They've got earnings. I mean, earnings for NVIDIA are going to be crazy, because NVIDIA has, the last two earnings, NVIDIA has grown 100%. Some of that quarter over quarter. I mean, that is insane. If they don't put up those numbers again, I don't know if the market kills them, but if they put up somewhat close to those numbers, I don't think the market really destroys them. And if anything, maybe the market takes them even higher if we're in an end of year rally with yields coming down and inflation data being good. And again, Jerome paused. And if we continue to pause, then, the market's in a decent spot where equities have the chance to go a little higher. So we will see what ends up happening. Meta at 315. Zuckerberg, we talked about this on Finance Junkies last night. He is in the hospital because he tore his ACL. It doesn't seem like the market's too concerned about that, but he's definitely not at the office operating the company because his ACL is torn. So, I wish Zuckerberg nothing but getting better, and we'll see what Zucks is able to do in terms of getting better. But even Meta continuing to do well at 315, right? Their earnings crushed it. They absolutely demolished earnings. And so now it's time to see, can the market continue to reward them and keep doing what they have to do? Ladies and gentlemen, thank you for being here. We have the market open in 10 seconds. We have 900 people here for the first time ever in market open history. Right before the market opens means the absolute world to me. It is Monday morning, another week to get it. This is one of those months where I just want to work as hard as possible. I've got a lot of things I'm working on this month in November, 2 months left until the end of the year. Thank you, 900 people, for being here for the market open. It is 9:30 a.m., November 6, 2023. Another day on planet Earth where the stock market is open. All right, wake your ass up and let's see what we've got going on in this market. Palantir opening up 0.41% up on the day, $18.97. We'll go back to Palantir and see if it goes below $18.90 or if it goes above that $19 range. It's 3.2 million shares have been traded so far on the day, so we'll see what happens to Palantir. Truist, 31.31, not bad at all for the regional banks. They're going up right now, especially because bond yields are starting to come down and interest rates have been paused. Enphase, 81.69. Netflix, $433. SLG, this one is a big real estate company in New York City, a big REIT, $34.13. Instacart, $27.27, still up below that IPO price. Square, $49.27. Square had amazing earnings. Cash App killed it. Square did well, up 20% since their earnings. They went from about 42 to $50. So Square, not bad. Congrats to Square holders if you are Square holders. Yeah, Square shareholders if you're holding that stock, or Block shareholders. PayPal, 56. Look at that. PayPal doing not too bad, up 0.87% on the day. PayPal earnings also were pretty amazing. I know the earnings call was a lot better than the actual earnings. Alex Chris really shared out a vision for what he thinks is going to happen with PayPal. 600,000 shares have been traded so far as the market opens. $60 billion market cap, $56 share price. This is one that I think towards the end of the year, it could get to that 75, 85 level. I do think it's possible. Again, I think the management has a lot to prove in terms of figuring out where the company can go, but the valuation is just absolutely ridiculous. And let's see by the end of the year where it actually ends up. More likely than not, it's going to be still in this $56, $60 range. And next year is when it's going to have a chance to prove their transaction margins are going up and all that stuff. But we will see what happens with PayPal. Tesla, 224.95, up 2.2% of the day. Tesla was below 200 just a couple weeks ago. Now Tesla at $224. Not bad at all. Shopify, 61. They also crushed earnings, which was really awesome. Nvidia, 455. Bitcoin, 35,198. Bitcoin is done in the 20,000s. That 25,000, 27,000, that is done. Bitcoin is out of that range. So I guess for those that own Bitcoin, you are doing pretty well, especially if you had an average below that $30,000 level. You are up on your Bitcoin. Elf Beauty, they had pretty good earnings. I didn't get to see their exact numbers, but they crushed it again. Their growth, absolutely phenomenal again. Market cap of $5.37 billion. Market tanked them a little bit because I think they had so much growth this year that they were just, I think the market was like, we can't justify giving them more of a premium. Elf stock year to date, how much is it up? Yeah, it's up 75%. When a stock's up 75% year to date, it's going to be tough, right? It's the same what happened with big tech. I mean, those guys were up 40, 50% year to date. Going to be hard for them to continue rallying. SoFi at $8.01. SoFi is really interesting. I don't know why SoFi is getting disrespected. Look at this. It's flirting with $7.99 right now. They had a phenomenal earnings. They did really well. I don't know why SoFi is continuing to go down. But SoFi is just not being respected by the market. Over the weekend on Twitter, I got into a little exchange with some people on the SoFi community. And I said SoFi is a bank. And they got a little annoyed at me saying, no, SoFi is much more than a bank. It's that yada, yada. And I'm like, look, yes, there's a tech platform involved in SoFi, Technisys and Galileo. None of that is being factored into the valuation. It's like if Tesla was valued at $50 billion. You could not say Tesla's more than a car company if he was valued at $50 billion because then it would be valued off the automotive revenues. Tesla's worth $800 billion because it's not a car company and it's not valued like a car company. And the valuation justifies why it's not valued like a car company. It's a tech company given the valuation. SoFi is not a tech company given this valuation. The $7 billion market cap, there's, how many startups that are barely doing as much revenue as SoFi. If anything, they're not profitable on the private markets that are worth more than $7 billion. It's like the reason they're worth $7 billion is because they're a bank. And I don't think that's controversial to say. They're a fast-growing bank, but they're a bank. And the market's not going to get that excited for a bank over, some of these tech companies. So I'm long SoFi. I believe in SoFi. I really think like Anthony Noto is just a monster. I think they're taking away a lot of big share from the bigger banks, but they are a bank at the end of the day, and they're susceptible to some of the valuation lack of premiums that a bank get. But eventually, I think it'll catch up to it. Palantir down a little bit right now, 0.45%, 1881. Again, price action on Palantir. It's run up 25% in the past week. So you're going to imagine Palantir is going to get a little bit of potentially downside, especially as the market cools down a little bit. Let's see. In the last month, Palantir's up 13%. Last 5 days, they're up 29.04%. So when you're up 30%, you can expect a little bit more volatility, especially in such a short amount of time. Microsoft at 355. Microsoft continuing their earnings run. Apple 177. The market drank the Kool-Aid a little bit, giving them a little bit of a premium. It was down a bit at 174. Now it's back up to 177. They put up $89 billion in earnings. I mean, when you put up that much money in earnings, Apple's going to, do well. Bayray says, so when Palantir was a $14 billion company, they were a consulting company. Bad argument. No, the consulting company thing I think is different because like SoFi is actually a bank. Palantir was never a company that has the margins of a SoFi of a banking company. Of a consulting company, right? They were never an Accenture or Deloitte. SoFi quite legitimately makes revenue from originations on loans, right? Yes, there's revenue from the B2B tech side, but it's so minimal in comparison to what they're actually doing. That's why I think they are more of a bank. But I see it's weird why people get triggered off saying it's a bank. Like, do you not know what you're investing in? Because it's a bank. You're investing in a bank. Like, let's not kid ourselves here. You are investing in a bank. I know I'm investing in a bank. I'm investing in hopefully a fast growing bank, which the member growth, 717,000 members, phenomenal, but it's a bank. Like, this is just, we can't be delusional here. SoFi is a bank. And it's okay that it's a bank, but it is it's a bank, you know? It's like, it's not that serious. It's a bank. But, you know, that's just how I feel. Ultimately, I'm long on SoFi. AJAM asks in the chat, thoughts on Lilium. This is so funny. You say thoughts on Lilium. I have call options on Lilium because, why do I have call options on Lilium? Because I had $100 in my bank account back in July, and I put it in $2 calls for Lilium that expire in March. So I'm down $80 on those. Let me show you guys this. It's hilarious. So I am long Lilium. I have a $2 call. I just threw it in there. I was like, well, it'll be $2 by March, and this thing is now down 77%. So Lilium, I need you to get to $2. Where's Lilium at right now? Lilium is up 2.55% of the day. It's $1.02. 98 cents, Lilium. If you go up 98 cents, I'll make $100. So we need you to go to work, Lilium. Lilium, for those that don't know, is a Palantir SPAC investment. One of the best Palantir SPAC investments, I think. So we'll see what happens with Lilium. Bank with tech foundations, but still a bank. I think that's an easy compromise. It's a bank with tech foundations. It's a millennial digital growing bank, but nonetheless, it is a bank. And again, I guess, yes, I'm wrong. It's a bank in general because there's more to it. I'm talking pure valuation. Maybe I should have made that very clear. Pure valuation, it's being valued like a bank. That's all. That's all I had to say. So still long SoFi, and we'll see, you know, where they end up going for there. But the market's definitely not respecting it right now. The market's definitely not respecting SoFi at all. Okay, so that was the market open in 7 minutes. Let's get to some other highlights. We have Enphase is now red, Truist is red, Palantir is red, Netflix is still green, PayPal's a little red. Of course, PayPal 55.93 is red. Why not? PayPal is red. Tesla's up, so that's nice. Let's get to some other things that are happening in the market right now as we are seeing different things kind of play up. Let me pull up a couple things, and then we'll get started. Nvidia, for some reason, is green, 458 right now. Nvidia is 1121, so November 21st for Nvidia, and we will see what is happening more with Nvidia. Let's look at this. I want to discuss a couple things around a little bit more of the actually, let's go to this. This is actually what I want. Let's start with this part, and then we'll go here. UAW auto worker strikes. So this has officially been resolved. United Auto Workers, as per the weekend, have been basically deciding to come to tentative agreements with Stellantis, Ford, and GM. Now, this is good for those companies. This is good for the economy. This is good for the general stock market. This is also very good for inflation. I think this is decent for Tesla. The bull case for why this is good for Tesla is now the Tesla workers will never have any incentive to unionize, even though I thought that argument was always weird because they get stock and Tesla stock is better and more valuable than any of the union benefits. So I didn't think that was actually going to happen. But there was some ingoing concerns that maybe they would want to unionize. The bad thing is, well, if the auto workers continue to hold up the legacy ICE companies, then Tesla would get some benefits from that. So let's listen to Mr. Gerber, our friend who loves Tesla so much he wants to be on the board of Tesla, speak a little bit more about what's going on with the UAW.
A little existential there, but let's bring in Gerber Kawasaki, President and CEO Ross Gerber, on all this, because you're a longtime Musk fan, Muskrat. I don't know. Anyway, Ross Gerber, Elon Musk and AI. Like, what is? I understand Microsoft and Google and everybody else. What's the Musk plan for artificial intelligence?
Well, I think that's what we're waiting to find out, because we've seen some great examples from Microsoft and Google and some of the other, really quick, I think, applications that are being built for AI, just like this is. Assuming it's around a large language model, I think it's just about the way the information is being given to us in a way that I think he feels will be much more accurate, fair, and safe for users. And we've seen that with chat and with Google, where certain topics, like we just punched up some cannabis information the other day, and it Google spit out the information and then it blocked it, and we were like, dude, did that just happen? It won't talk about cannabis, so I think that AI, and there's lots of positives, and I do think it's a transformational moment, and just like Elon, I think there needs to really be some good guardrails around it.
EVs, space travel, Neuralink, Starlink, probably other stuff. Is Elon Musk, X, of course, too powerful?
Too powerful? I don't know. I think
Ross,
Elon-
I literally have progressive friends who are terrified that like he controls the car market. UAW, they got a massive win. Sean Fain, UAW president, he wants to unionize Tesla.
Well, I think that goal might create even quicker drive by Elon to build auto building robots. And that's what, Tesla's building right now are robots that can build cars. So I think if the UAW really pushes hard enough against Elon, he might be really motivated to make robots to replace these jobs. So I don't think that that's a reality for Tesla.
Now that's what I wanted to bring up. Okay, so that's what I wanted to talk about. This was really, really interesting. So Ross Gerber says, okay, if the push to unionize in the context of Tesla, and again, that UAW president has his Sean Fahey, he has his own motivations. If he's able to somehow get Tesla workers to feel like they should unionize, because remember, this guy, you got to give him some credit. This guy took Ford, GM, and Stellantis workers, and he basically forced them to go under strike for 3 months, or at least I think it was 2-3 months, and ultimately get up to this deal. If he somehow infiltrates the Tesla community in terms of the Tesla auto workers and basically convinces them, hey guys, you've got this, billionaire that's buying Twitter and he can't even, give you better wages, blah, 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 all these talking points, and infiltrates their ecosystem. One of the interesting things Elon might do is just be like, you know what? What if we just make some robots and we get rid of the workers? And these workers as well, can do half the stuff that these robots can do half the stuff that the workers were doing. GM is expected to invest $13 billion in U.S. facilities under the new United Auto Workers deal. I don't know exactly the terms to agreement, but what I do know is that the UAW got a lot of concessions. The UAW's tentative agreement with Stellantis and Ford, the deal includes 25% pay increases, bonuses, and other enhanced benefits, as well as a $5,000 ratification bonus. There's 46,000 members, so $13 billion GM is going to be investing in U.S. facilities. They were not going to do this before this deal. And one could argue that if Elon was under this type of pressure, that's where the bot has a lot of applicability. Like if robots could make the cars, could you imagine the margins on those Teslas without having to actually pay people to make the cars? I was at a McDonald's the other day, and I guess this is the first time I was seeing it for a while. There were no cashiers. It was like, it was at the airport. That's what I remember. It was at the airport. There was just a kiosk. You just order right there on the kiosk, and then boom, you're good. And it was just like, dude, like they have to be making a better margin on those burgers because there's a fixed cost for those machines and not a $15 an hour cost. Now in California, $20 an hour cost for those workers. So Arnie says, can't believe Gerber said something smart. If they end up making robots, then those robots would be definitely helping to Tesla. But I don't think they're going to do that because I don't think the workers are going to want to monetize. I mean, they're going to want to unionize anytime soon. So we'll see what happens. But the UAW, they got a big win over some of those broader car companies, and they're doing their thing. I mean, they said they were going to push the car companies to the limit, and they pushed the car companies to the limit, and they got the job done. So I think that was an important thing to understand from there. Let's listen to Dan Ives speak a little bit around Apple earnings, because he had some thoughts to say around Apple. That was last week. Let me see if I can pull that up in a second. Apple earnings were okay, not amazing. Definitely wasn't the best that we thought we would see from Apple. And, they did what they had to do. The street is expecting of 122 billion in the Q4 quarter. They did 89 billion last quarter. So, I mean, we'll see if they're able to get up to that level. But services did well. iMac did not do well. China definitely did not do well. So let's see what Dan Ives has to say on Apple. Then we'll get back into see some of where these stock prices are.
His outperform rating. He has a price target of 240 and says the stock could be weak on headline noise, but he'd be a strong buyer on iPhone and services growth. Here he is, Dan Ives. Always good to see you, Dan. All right, why are you still a buyer? What about the iPhone demand at least seems to have heartened you?
Yeah, well, I think when you look at it, the iPhone demand was actually strong, and even in China, and called that out, even going into the December quarter. Now, China was weak because of Mac, iPad. What I view as more noise, the core, the bread and butter here, iPhone demand looks strong. Now growth's going to return. Services was massive in terms of double-digit growth, and the margin story actually continues to expand. So to me, the fictional narrative that the China iPhone demise was going to start, that's essentially thrown out the window. So that's why, to me, even knee-jerk, because this thing's down because of Mac, FX, iPads, we're strong buyers here. I view it as really more of a table pounder going into the next 6-9 months.
Although I thought analysts were looking for as much as 5% growth for the next quarter, we're not going to get that. Is that a disappointment?
Yeah, and David, to that point, that's really more Mac, iPad, and FX. If you look at actual iPhone units, that's actually in line with expectations. You're actually starting now to see growth. And the most important thing here, as you talk about so much on the show, it's about China. And the China iPhone story that Cook really reiterated last night, that remains firmly strong. And I think that's the important thing relative to Huawei, geopolitical, and many yelling fire in a crowded theater, that the Apple growth story was really in the rearview mirror.
That services number is pretty extraordinary as well. You know, give me a take on 22.3 billion, what that looks like annualized. The margins on that obviously are quite strong, and what kind of multiple therefore is deserved.
Well, I think that's really been the key to the re-rating in Apple. You know, many talk for years, right? 12 times is where you buy it, 16 times where you sell it, and continue to be head scratching for the valuation today. It's the services. I mean, services at one point was worth 150, 200 billion. We view that as 1.4 to 1.5 trillion. That's 100 billion annually, now growing low to mid double digits, margins double the actual hardware business. Services is the key. And that's why, to me, as a bull, I sit here more bullish on Apple than relative 24 hours ago because of services and because that iPhone story.
Yeah, I don't know, Dan. I don't know if services is really the bull case on Apple. I mean, it is the bull case. If you're a bull, you have to be bullish on services, but I don't know if that's the reason to buy Apple over some of these other companies. We'll talk more about that on another day in terms of services, but it's not the most exciting to me, I guess. And I don't own Apple stock, so I guess I'm a little biased here, but services is the reason for why you would own Apple stock if you own it. All right, the market's going green, folks. 1853 on Palantir down about 2%. Truist is down. Enphase is down. KRE is down. Why are we red? What happened? PayPal's down. Shopify's down. Look at this. Pinterest, Uber, McDonald's, all red. The index is barely up. It's up 0.09%. What happened? Did some news come out? Is this the market just being the market? Is the market just being a meanie like it always is? Or why are we turning red? Is it because we were talking about an apple and apples are red? Is that why? Is that what happened? Is that what's going on? Is it because apples tend to be red? Maybe I should have pulled up a granny apple because those are green, right? And then we would have, please laugh. Okay. Anyway, wow, Bumble founder CEO is stepping down. Oh my God, that is interesting. I know that has nothing to do with what's going on in the market, but wow. The Bumble CEO, Bumble is a dating app. Whitney Wolf Herd, she's one of my favorite CEOs ever. She's stepping down. Incredible. Why is she stepping down? She's like phenomenal. You know why she's stepping down? Because that stock's probably down like 80% since IPO in 2021. That's probably why she's stepping down. But goodness gracious, that's tough. Okay, so yeah, we're getting a little bit of a red market. Honestly, I think the reason some of it's red is just because some of these stocks just got a little bit too green last week. I mean, Palantir, it's obvious, right? It was up 30%. To imagine it's going to keep going up 30, 40, 50%. Like in the next couple of days, probably is not going to happen, right? Like just more likely than not. SoFi getting decimated. This one is the one that doesn't deserve it. SoFi doesn't deserve this one. This one's too good. So that's bad. But the rest of them are getting pretty hit. Pinterest is still up 20%, even though it's right on the day. Meet Kevin. Oh, Meet Kevin, by the way, for those that don't know, Meet Kevin bought Palantir. Meet Kevin has bought Palantir. I let me pull up the screenshot and show this for a second. Maybe that's why Meet Kevin's a little bit green. Kelly says Granny Smith got me. See, I know some people had to find it. At least Kelly found some value in the joke. Meet Kevin bought Palantir. Now he had to buy it at like 17, 18 bucks. There's no way he got it at a cheaper price. 4% of his ETF is now Palantir. Let me pull this up real quick. This is what we saw. He bought the whole thing. No, he didn't buy the whole thing. Not yet. He's not that rich. Not yet. He sold some Autodesk. He bought some more Enphase, and he bought 4.66% of the portfolio into Palantir. This was actually a really weird thing for Meet Kevin to do. Palantir was up 30% last week. He had to buy it while it was either up 15%, 20%, or up 30%. There's no way he got it in the $14, $15 range. There's no way. Like, Palantir was up, 16, $17 in pre-market before earnings, and then it exploded to the 18s. So he had to buy at 17. I would give him the least he bought it at was like 16, 30, maybe. And we didn't even see 16 after earnings because we ballooned to 17. So probably not. So I actually think this was not the best buy by Meet Kevin, because I don't think you buy a stock when it's up 20% on earnings day. Like, that's the thing you don't do, right? Like, it's so weird to me. Meet Kevin's like this big financial YouTuber. He owns his own ETF. Why are you buying a stock up 30% the day of earnings? Like, when you know it's going to be really hard for them to go up 40, 50%, right? It's going to be really hard to get alpha unless he's DCAing, which is fine, I guess. You can say, oh, the narrative's changed. Palantir is finally doing well, blah, 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 blah. And then that's the reason you're buying them. Sure. But still, the timing of it was very weird. So, yeah, if you can find out what price he bought it at, let me know. But that was just very weird that he bought. Now, I'm happy he's buying it. On his podcast, he was talking very highly of Palantir. He thought Peter Karp was the founder of Palantir. So I cannot make this up. That's who he thought the CEO is. So that's the guy who's buying Palantir. But nonetheless, he is now in Palantir a little bit more. It doesn't matter when he bought Amit. He's one of us now. Well, Meet Kevin, Meet Kevin. He'll get in and out of position as much as I don't know if he's one of us yet. We have to see how long he holds it for. But it was weird seeing him getting that position. Hopefully he holds it for a while and he just DCAs because, could Palantir run up to 22 by the end of the year? Sure. Could it go right back down to 14? Yeah. So it was just a weird timing play on his end. He hasn't sold any Enphase. He's loading the boat on Enphase, and he's continuing to buy it. I actually haven't heard his justification for what's going on with Enphase. I haven't heard him talk about it anytime. So I would want to hear, how he thinks about the company and if he's still long-term bullish. I mean, at this point, he has to be bullish. SoFi getting decimated, down another 4% today. Dutch Bros is down a little bit. S&P still holding up, 435. Verizon is down a little bit, 35.83. Google at 130. Amazon 139. Disney 85.13. Disney did buy Hulu for $8.3 billion. So they officially bought out all of Hulu. Disney has now bought in Hulu. Let me pull that up as well. And then we got to talk about Robinhood that is earnings tomorrow as well. So let me pull this up right here. Disney is acquiring Comcast stake. It's like Tim Apple. Yeah, basically. It's like Tim Apple. Disney is acquiring Comcast 33% stake of Hulu for $8.6 billion. Comcast stated, we look forward to the appraisal process and the determination of Hulu's fair market value, which we expect to reflect the assuring value of the business. Disney raised the price of its ad-free tier form from $10.99 to $13.99. Hulu is going to be $18 a month. Does anyone watch Hulu? Can you put in the chat if you watch Hulu at all? I don't watch Hulu. There were some shows before I used to like on Hulu, but I really don't watch Hulu, but I'm an anomaly. I know Hulu has a lot of market share in the digital ad TV share space. It's a go-to for a lot of people. I personally don't watch it. I also don't like Hulu with ads. My sister is so weird, bro. I'll catch my sister watching Hulu and there'll be ads. And I'm like, yo, it's $3 more a month without the ads. Why don't you just you make good money. You get $3 a month. She's like, no, I like the ads. I was like, what? What do you mean you like the ads? She's like, no, I like the ads. I was like, why do you like the ads? She's like, oh, it gives me a break. I was just like, are you fucking kidding? You like the ads because you enjoy watching TV so much. You like the ads so you can take a break. That's someone who actually likes TV, bro. My sister likes TV. I was flabbergasted. I was like, what are you talking about? You like the ad. She's like, I love the ad. I tried to upgrade. I was like, I'll pay the $3 a month. I don't want you to say. She's like, no. I like the ads. You know Zucks, when he went in front of Congress, they're like, what's your business model? He's like, Senator, we run ads. She's like, Amit, I like ads. I was just like, all right, I guess you like ads. That's all right. So I guess Hulu does have a little bit of a market for some of those people that like it. Robinhood earnings. Let's talk about this. This is a company I have a position in. It's one of those stocks I'm actually trying to be really long-term in. I do have some short-term options for January 2025, but I do want to make this a long-term position. I know we have Arnie in the chat who also loves Robinhood as well. So we both have positions in the company. Let's talk about what they have for earnings. We're estimating negative 10 cents a share in GAAP profits. EPS normalized adjusted would be 12 cents a share, and revenue would be $478 million. I think they will probably beat on revenue. Their net interest income is going to be fantastic because interest rates continue to remain high, and Robinhood has like $5 to $6 billion in cash that they're going to be able to get some interest off of. The problem is they had $100 million regulatory fine. I don't know why they got fined $100 million, but they got fined $100 million. And this is a company that was profitable by only 25 million last quarter. So a company that was only profitable by 25 million, if they have to pay 100 million, they're not at the point where they can, give away $100 million like it's pennies and move on with their day. That 100 million is definitely going to affect their GAAP profits. So I would imagine, unless they figure out some really interesting way to become profitable, they will return to being unprofitable this quarter. The street probably won't like it, but it'll be because of a stupid regulatory fine. Next quarters, that'll go away. The thing that's interesting to understand about Robinhood, even if this quarter is not the best, the volatility index has spiked dramatically through most of October. And when that happens, trading volumes go up, whether, people lose money or make money in the stock market. Those trading volumes increase, lead to increased payment for order flow, which is Robinhood's business model. So I think Robinhood will get some momentum out of this in Q4. But at least as per Q3, we're probably not going to get too much momentum as well. I'm just waiting for Robinhood to be available in the UK, and I'll switch to them. Yeah, and they're going to expand to the UK hopefully by early 2024, and that'll also bring up some of their MAUs because there's a lot of people that would want to use them, but they just haven't been able to use them at all. So we will see. We will see what ends up happening with Robinhood. I use Hulu Live Plus TV. It's competitive with other streaming platforms, mostly for college sports. I forgot about that. Sports is a big part of Hulu. A lot of people like sports on Hulu. So that's another reason for why Hulu has a moat. Now, with Amazon Prime and YouTube TV getting so into sports, I wonder how long they could be competitive in the sports world. But that is something that is probably attractive to sports fans as well in the context of Hulu. Q3 is already the past. Right now, Hood should be mooning Hood should be doing fine with VIX and Bitcoin mooning. That's another thing. Bitcoin is mooning as well. There's $3 billion of exposure of Bitcoin on the Robinhood platform. So, Bitcoin went from 27,000 to 35,000. A lot of that probably happened on Robinhood. So we're going to see some crypto transaction revenues increase as well. And we'll see where it goes from there. All right. That is it for me on today's Market Open. Thank you, 800 people, for being here. Let's do word of the day and we'll end it out. If we're looking at the stock market real quick at the end, Palantir 1861, Truist 31, Enphase 76. Netflix is up a little bit. Tesla's green, 220, and S&P is green. So the indices are green. Let me also check on the NASDAQ real quick. NASDAQ is at 13,522. The NASDAQ was at 12,800 last week. So a sharp 700-point reversal on the NASDAQ. In fact, I need to show you guys this real quick before we do word of the day. This is literally a V. This is literally a V, as you can see right here. Look at that. Sorry, it was 12,500, not 12,800. So we went all the way down to 12,500, right back up to 13,500. So basically a 1,000-point swing on the NASDAQ. When you have that big of a swing, you're going to get some stocks being red. So Palantir up 30% in a week. It's going to be a little red at 1854, but nonetheless, it's at 1854. It was stuck at 14 months ago. So not bad at all for Palantir and some of that price action as well. All right, let's try out word of the day, and then we are done for today's Market Open. It is Monday, ladies and gentlemen. Copactic. This is interesting. Copacetic. Sorry, copacetic. Copacetic means fine, completely satisfactory, okay. You know what this reminds me of? This is like when you're in a fight with your girl, and you're like, babe, is everything okay? And she's like, it's copacetic. And you're just like, babe, she's like, it's copacetic. It's fine. Don't worry about it. It's copacetic. It's not a big deal. And that's exactly what this reminds me of. This does not, like, if someone said they're copacetic, they're not fine. Like, you better check on your girl. If the fact that you don't know this word, what do you mean I don't know? This is a real word. You guys know this word? Does anyone in the chat besides Kelly know this word? It can't just be me. It cannot. This is a new word to me. Is copacetic a real? I know that word. My dad's favorite word. You guys know these words? Copacetic is passive aggressive. 1,000% copacetic is passive. How do you guys know these words? You guys know these words? Eeyore knows these words. It's a new word to me, copacetic. But doesn't that sound like it's passive aggressive? Like if you say, hey, are you okay? And you're like, I'm doing copacetic. I'm fine. I'm copacetic. It's like, no, you're not. There's something bothering you. Kelly is not copacetic. Exactly. Yes, of course. We speak English, so you know that word. Wow. I'm 44, bro, of course. All right, fine. I guess it's a new word for me, so we'll have to find a way to use that word. All right, everybody. Thank you for joining. We had 900 people at Market Open. This was pretty awesome. Thank you guys so much for being here. I appreciate it. It means the absolute world to me. We'll be back tomorrow with another Market Open. I'll have a Palantir NHS update. We'll go more in depth on it later today on the Palantir Daily episode and talk about why this NHS contract is getting delayed. Biggest news for today, Elon's new product. We'll see what happens with that. Berkshire has $157 billion in cash. We'll see where they start to allocate it over the next couple months. And Palantir NHS contract, we should know by mid-November, which is probably going to end up being 2024 if Palantir gets this deal. And we'll keep going from there. Robinhood earnings tomorrow. We'll see what happens with that. And we have some other earnings. We have Uber, AMC, Disney, a lot of companies reporting later this week. So a lot to get into, and we'll keep going from there. Please like the stream. Please subscribe. I appreciate you all, and I'll see you tomorrow. Have a great, great Monday. Let's kill this week. See you guys tomorrow. Bye, everybody.